Good evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. Will we once again bring bad tidings? The markets are simply not able to recover from the selling pressure. Today, the mid-cap index has ended 1.5% lower, and the Nifty, although it's ended a little better at 1% lower, it is still the lowest point of 2015. Quite clearly, the markets are still waiting for some kind of FII flows or good news, but at the moment, selling continues.
Absolutely. Hi, Lata. Well, the disenchantment from India seems to be continuing. No trace of those dollars coming back in, and the results are on our screens. Let's start with the headlines. No let-up in the selling pressure on Dalal Street as the Nifty ends at 2015 lows after dropping 1% today. The Sensex falls 245 points, ending close to 26,500. PSU Bank, metal and oil and gas stocks trade weak.
The mid-cap index falls over 1.5%, seeing more pain than the blue chips. Nestle drops over 7% as brokerages continue to cut estimates on the Maggi noodle mess. Wockhardt ends 4% lower after the company recalls 2 drugs from the US market. Eros rallies 12% as shareholders stall the company's planned foray into the TV broadcasting business.
Sun TV, a major newsmaker today, tanking 22% as the Home Ministry denies clearance to Sun Network's 33 channels, citing security concerns. The management tells CNBC TV 18 that the company will move court if its license is revoked.
Well, those were the headlines, and here are the experts that we have lined up on the show for you. Nilesh Shah of Envision Capital will join in with his take on the markets from the global arena. Harold Vanderlyn of HSBC will tell us how he rates India in comparison with other emerging markets, and we will also get you managements of some of the companies like Sun TV that were in the news today. All that's coming your way in the next half an hour. But first up, Surabhi, tell us about the markets.
Well, what a day on Dalal Street. There's simply no respite for the bulls after a harrowing week which ended with 4% losses. This week also started off on a disappointing note. Sonia Shenoy is now here with a wrap of the day's trading action. Sonia, bears all over the street.
It was a very disappointing session for the markets. One actually saw it coming, last week the Nifty was under pressure all through the week. There was no respite. And today as well, from the word go, the market was under pressure and we didn't see any recovery through the trading session. Now the Nifty has lost about 12% from its all-time highs. So most traders believe that this is a mini bear market that we're in a longer-term bull market. Remember that 8,050 level that we broke today was a crucial support level that most for watching, and now we come to that sacrosanct level of 8,000 on the index. If that gets broken, then all hell could break loose in the market and we could see a lot of panic selling on individual stocks. But today, if you look at what took place globally as well, India continued to underperform markets like China. So today, China was up almost about 2% and now for the year, the Chinese market is up almost 60% versus the Indian markets down about 3% And the consensus view is that at least in the near term, China is a better tactical bet than the Indian markets. However, coming back to our own markets, in terms of the stocks today, the biggest losers were the banks. PNB, Bank of Baroda, IndusInd Bank, HDFC were all under pressure, all falling about 2 to 4% apiece. Oil and gas was not too far behind, so KN, Reliance, BPCL were under pressure as well, all down anywhere between 1 to 3%. And metals, Vedanta, Tata Steel and Hindalco saw cuts of around 1 to 3% or so. Gainers, there were just a handful of, motley bunch of stocks. So NMDC, Bajaj Auto, Tata Power were just a few stocks that ended in the green today, while on the mid-cap end, the stock of the day clearly was Sun TV. That stock was down almost about 22%. So as you can see, big gash is there. Adani Enterprises too down about 13.5%. And then names like Nagarjun Construction, Unitech, Canara Bank and Union Bank were under quite a bit of pressure. So seems like there could be still some more blood on the screen. Watch out for that 8,000 level closely on the downside. Back to you.
All right, Sonia, thanks so much for that. On that note, let's get into market voice. Nilesh Shah, MD and CEO of Envision Capital, says that the bull market in India hasn't been challenged yet. He expects corporate earnings to actually improve here on.
I don't think the bull market hypothesis is at risk in any manner. We clearly believe that the next few years seem to be very good for the Indian economy. And we think that this is clearly a phase of consolidation and a bit of a correction. It's kind of markets taking a breather for the next big up. We're going to spend probably one more quarter trying to kind of navigate ourselves, forming a bottom. It's pretty much likely that maybe from between now and October, the markets are going to remain sideways in a range. Before you know, the whole backdrop of monsoons, rate hike is behind us. Very unlikely that from here the EPS estimates for the Sensex will get revised downwards. Clearly, I believe that the Q4 earnings were perhaps the last nail in the coffin as far as the earnings estimates are concerned. We clearly believe the mood has shifted decisively. So I think clearly from upgrades same time last year, we're now witnessing a lot of downgrades. And I think the street really expects that the earnings recovery is going to basically get postponed by a few more quarters. But our own sense is that, that seems to be a very unlikely scenario if you assume that, of course, the H1 is going to be a soft and a weak H1 for corporate earnings.
All right, that's a view on the market. Let's now talk about one stock that took a serious beating in trade today, and that was Maran Brothers promoted Sun TV. The stock fell more than 20% in trade today after the Home Ministry denied security clearances for all its channels, citing the various probes going on against the company and its promoters, the Maran Brothers. But there could be a silver lining perhaps for the South-based media conglomerate. CNBC TV 18 learns that the nodal ministry for all broadcasters, that's the INB ministry, is not exactly in a complete agreement with the Home Ministry. Rituparna Bhuyan filed this report for us.
Clearly, the MHA and the INB Ministry are not on the same page as far as Sun TV issue is concerned. It all started with the midterm review of the license. The process is initiated by the INB Ministry, after which clearance needs to be taken. Basically, an update needs to be taken on the security clearance, which is already provided on the license. This time around, the MHA said no to the security clearance because the MHA believes that there are already two charge sheets against promoters of Sun TV, and hence security clearance will not be given till there is a order from the court regarding those two charge sheets. On its part, the INB believe that the grounds for not giving the security clearance, that is not enough, and the channels should have got an extension as far as the security clearance is concerned. It has in fact written to the INB Ministry, has written to the MHA, urging them to review its order. Of course, the MHA is yet to oblige, and it now remains to be seen if the Sun TV network takes a legal recourse regarding this entire matter. Remember that Sun TV has already approached the courts and got a stay when a similar situation happened regarding its FM channels. But we'll now have to see if the Sun TV network also approaches the court, especially the Madras High Court, regarding the MHA not giving its security clearance to its 33 channels. With that, it's back to you.
All right, Ritu, thanks for that report. Well, earlier today we spoke to the management of Sun TV stating that they have not received any notification from the Home Ministry. They say that they will definitely seek legal recourse if the license is revoked.
Recently, we did have a situation where the Ministry for Home Affairs did not give the security clearance for our radio business, some of the radio stations. And we understand that the Ministry of INB has written to the Ministry of Home Affairs requesting them to reconsider that decision and recommending issue of the security clearances. I'm not supposed to be knowing this, but we understand this from the verbal averments that were made by the Council for Government of India before the Madras High Court. So I would imagine that Ministry of INB may not necessarily toe the line. I do believe that we will not come to that stage, because it seems to me that this may well be a vicious rumor. But let's assume that we do reach a point where something like that, God forbid it will be an Armageddon event. But if we do come to that stage, I do believe that there are sufficient recourses for us to get protected. I still believe that some very sound democratic institutions are alive in this country. So we will get the protection from the appropriate courts.
Well, that point has to be taken on board. The IMD ministry clearly saying going against what the Home Ministry has recommended, and these are still recommendations, and the company always has the option to go to court. So this at the moment definitely looks like a bit of overreaction on the Sun TV stock. Moving to the other stock that has been declining every day, the Nestle stock. The Food Safety and Standards Authority of India has kept its promise and widened the scope of its charge against instant noodles as a product. Apart from 9 variants of Maggi noodles, it has ordered the state food authorities to conduct tests on 7 other brands to determine their safety as well. Nevertheless, the Nestle stock cracked further today after brokerages warned of a sustained underperformance. Agam is here with a roundup of what the brokerages are saying. Agam.
But even after the recall of Maggi noodles, we have more and more brokerages turning bearish. And in fact, we are looking at deeper price cuts when it comes to some of these brokerages. Some of them giving a price cut to as much as even 20%. Beginning with Goldman Sachs, they put in a price target around 4,664, cutting it from 5,131. This is on the back of a potential sustained underperformance, and they're also of the opinion that the incremental marketing spends will bear down on margins. Moving on to JP Morgan, while they maintain a neutral stance with a price target of 7,000, they're also of the opinion that for Nestle to come out of the current issues will take more than just a handful of quarters. And finally, we also have CLSA on Nestle, where they have cut the price target to around 4,900, and they're of the opinion that the product withdrawal will cause more weakness, and because of that, they've also cut their CY 15 to 17 EPS estimates by nearly 20 to 25%. On the whole, you have more and more brokerages turning bearish on Nestle.
All right, Agam, thanks so much for that. So another 7% tumble on Nestle today. Let's move to Motown then. Maruti was in focus after the yen has depreciated to a 13-year low against the dollar. Now, Maruti imports nearly 23% of its raw material in yen. We have Sonia Shenoy joining in to tell us exactly how this is going to help the company. Sonia, take us through the details.
Well, thanks for that. Yes, Maruti was in focus today. The stock initially had moved up higher on the back of the yen depreciating to a 13-year low versus the dollar. That will benefit Maruti a whole lot because remember, Maruti has an exposure of 23% to the yen. So Maruti imports nearly 23% of the raw material in the yen form. Now, every 1% depreciation on the yen has a 1.6% positive impact on Maruti's profits and a 20 basis points positive impact on its margins. And Quant Capital put out a note where they say that assuming the yen depreciates to 133 to 136 to the dollar, Maruti's fair value could increase all the way to 4,940 to 5,000 rupees per share.
All right, speaking of the yen, let's get you a global voice in. Herald Vanderland, the head of equity strategy for Asia Pacific at HSBC, says he expects the Indian markets to correct further from here, and he continues to maintain an underperform on Indian stocks.
We've been on the way to India for a little bit of time now, so it's a market we honestly don't like at this particular point in time. That's not too much related to the US, although I would argue that if interest rates stay lower for longer, then on the margin, this will be positive for emerging markets as well, and that would not exclude India, that would include India in that sense. So that would be positive. But we're a little bit more concerned actually on some of the domestic issues and the fact that everybody's overweight and the valuations are relatively high in India.
Time for a break now, but coming up on the other side, Sudarshan Sukhani will be joining in for a technical chat. We'll also tell you about the stocks that were in news today.